Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and this week's topic is, it is what it is. Deal with it. Trading is a roller coaster ride, guys, plain and simple, and I don't care who you're watching, who you're listening to, who you're talking to, whatever. None of us are perfect, except for my wife, that aside. None of us are perfect. Okay, that means you're going to lose sometimes. No one bats 100%. No one. 0% of the population bats 100% in this business. Okay? So knowing that, we have to sort out how to deal with the roller coaster ride. Okay? Sometimes the stock tags you by a penny. Sometimes it holds by a penny. Sometimes it misses target by a penny. Sometimes it reaches target by a penny. It happens all the time. Okay, so today we're going to talk about not only the emotional aspects of it, but the objectivity side of it. Okay, you have to be truthful with yourself. You have to be objective with yourself. Otherwise, the market's going to eat you up, spit you out, and just chew you all around, and you're going to think this business is out to get you. And I guarantee you there's people listening that's going, oh, I'm a victim of the market. The market makers are out to get me. HFTs are out to get me. Blah, blah, blah. It's bullshit. Stop it. The victim mentality gets you nowhere in life, and it definitely gets you nowhere in trading. Okay? The market isn't out to get you, guys. There's reversion to the mean, regression to the mean. There's a roller coaster ride in this business. So we're going to talk about that roller coaster ride today, how to deal with it, some of the things that have happened to me through the years, and things that you've probably experienced as well. If you like these videos, please click that like button, hammer that subscribe button. I'm Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is, it is what it is. Deal with it. Growing up, I don't know why, and I'm sure some of you have had the same experience, but my mom used to love the phrase, it is what it is. She used to say it all the time. The Japanese will say, oh, shogunai, right? It is what it is. And it's not always what you want to hear when you hear it. Because at that moment in time, probably something that you don't want to happen is happening, and you just simply say it is what it is. Okay? So it's a very common phrase, and many of you have heard it. Like I said, my mom used to use it all the time. Today, we're going to relate it to trading. In terms of what is trading and how does it impact you in terms of things happening to you, the psychology of trading, the money management, the trade management. It's kind of a broad topic today. Part of the slides in here I used a couple years ago, but I would say half are new today and half are older. But it's a topic that I think we need to have a discussion about because you see some people and they're, quote, letting the market get to them. And you can't do that. I saw it today with Yaroslav. Literal words, F this shit, I'm out of here. Right? Pretty much. I mean, I might be off by a word, but that's exactly what he said. And when you think about it, you want to ask yourself, well, what would elicit that type of response? Right? What would elicit that type of response? Well, I didn't see anything that would seem to elicit that response from what I read. And meaning, I think you said, Yaroslav, that you haven't taken a trade in 3 days and you missed the Google or whatever the stock was today. So basically, you haven't taken a trade in 3 or 4 days. Well, that's not so bad. I've lost money the last 3 or 4 days. I'd rather be you right now. Do you see what I'm saying? So, okay, you missed a trade maybe you should have gotten. Shit happens. It is what it is. But you haven't taken a trade in 3 days and you're all pissed off about it? I'll give you my P&L for the last 4 days, and I will bet you $1 million you'll take no trades over the P&L I have for the last 3 or 4 days. Right? So you have to stay grounded, guys. You have to be able to be mindful. Mindful, you guys remember that from last week's psychology lesson? You have to be able to just take a step back, look at the big picture. And realize that if this is something that you're wanting to do or going to do as a job or a career long term, this is going to happen. You're going to have roller coasters. If you ever look at a perfect trend, guys, perfect power trends do what? They go up, pull back, go up, pull back. They go up, they pull back 50%. They go up, they pull back 50%. They go up, they pull back 50%. That's a perfect power trend right out of the book. So how do you deal with those 50% pullbacks then? You just take it on the chin. That's just part of the move up. It's just the way it is. But before I get into that, I thought I'd change gears for a second. And usually I do, when will the insanity stop? Well, I got a nice email from somebody. I don't know, this is like a week or two ago, something like that. And it says basically, hello, from Texas again, Jared. Hope all is well, bud. I haven't spoke to you in a year or so. I just want to say thanks for everything you do for the trading community. You are, without a doubt, one of the best trading coaches on the internet, period. I have only been trading for 5 years now, and I have an amazing track record the last 3 years. And I actually just landed a job with a hedge fund as a trader without any degree or GED or anything, only because of my track record. I wanted to let you know that if it wasn't for you, I'm not sure I would even be close to where I am today. That's a pretty big deal. I don't know all the specific details, but this person did not say, to be clear, prop firm. They said hedge fund. Now, yes, for all the negative Nellies out there, there are a lot of different hedge funds. It could be a $10 million fund. It could be a $10 billion fund for all I know. But to be able to get a job just on your track record alone with no college degree is pretty damn impressive. That or the hedge fund is extremely desperate, which they probably aren't. So this is amazing. 5 years in, and for 3 of those 5 years, so basically this person got it at the 2-year mark because 3 of the 5 years they've been doing quite well. All right. I think this is amazing. I think it's wonderful. Why do I say this to you? It's not to brag for me. It's to say it is possible. This person did it. Why can't you do it? You may not do it in 5 years, and you may not do it in 10 years, but it's possible to do it. This person is proof that it is possible to do it. So I just think it's wonderful that somebody out there is kicking ass and taking names, using live trader strategies. I think it's wonderful. Now, let's move along. You have seen these 2 next slides before, but they need to be reiterated. Okay, they need to, because it's going to have a huge impact on what I'm going to talk about afterwards. All right, know thyself. Having a trading plan that is conducive to your personality style is crucial. Do not ignore this. Most traders chase money without ever giving thought to personal strengths. I want you to, yes, it's underlined. Yes, it's italicized. Yes, it's in pink. Okay? Most traders chase money without ever giving thought to personal strengths and weaknesses. They're like, oh, it makes more money. I'll just do that. I'll take that. And then you can't do it. You can't follow it. So what was supposed to make you more money ended up making you less money because you couldn't follow it, right? You couldn't follow it. So you'd rather, in that scenario, have a management that made less money, but one you could follow, because by following the one that made less money, you're doing 2 things. 1, you're proving discipline, and 2, you're a calmer trader. You're a trader that's much more calm and relaxed, which is what you want. You can build on that. You can't build off of chaos, right? That's difficult to do. But you can build off of a relaxed, patient trader that goes from 1R all or nothing to 1.5 to 2 to 3. But if you start at 3R and you can't follow it, you're going to have a heck of a time. You may even cost yourself money. I think, as it says here, it's one of the biggest reasons that traders fail, right? The lack of a trading plan that fits them. And that's the key part there, that fits them. And you guys have heard me say this for a long time. It's nothing new, but it's going to go into what we talk about today, okay? Because knowing yourself, knowing your strengths and your weaknesses is a massive part of dealing with those pullbacks. You're going to have them. Even Ali the Great, all right, has had a pullback recently. Now, today he might be up 20R for all I know. But my point is trying something a little different, doing it the right way. But he's even had a pullback after starting the year with an incredible run. Everyone has pullbacks from time to time. It's just impossible to be perfect, okay? Now, track all your trades. Yes, I know you're tired of hearing me say it, but how many people still aren't doing it? Probably a lot. Make sure to have a column that includes actual results versus trading plan results. You want to know exactly how you're doing versus your plan, against your plan all the time. Try not to adjust your plan too often. Small adjustments are okay. One bad month of trading does not equal a bad trading plan. I want you to read that. One bad month of trading does not equal a bad trading plan. Again, assuming you're following it. It just means it's a bad month. That's all it means. There's nothing more to it. It simply means that for that month and your plan, the market just wasn't conducive to making money. That's it. No more, no less. Could it become more? Possibly. But you can't know that in 1 month. It's too short of a period of time. Okay? Trading plans only work when they're followed consistently. Ali, what's the phrase that you say? It's not coming to me right now. It's like something is the destruction of systems. I can't remember. It's just not coming to me today. You'll say it soon. But they only work when you follow them, right? When you follow them. Variance is a system killer, something like that. Yes, something to that effect, right? Okay? And he's right. You can't call it a system if you keep varying what you do or your approach every single day. It's just not going to work, okay? We are odds traders, so let the odds play out in your favor, guys. This is nothing new. You've heard me say it. It's been in lectures in the past. I'm just reminding you before we get into other stuff, okay? One bad month does not equal a bad trading plan. You know what I'm saying. You've all been there. You've had a couple bad weeks and you send me an email and you're like, Jared, I need to change my plan, or I need to do this. I need to do all that stuff. And then one last slide that you've seen, and then we're going to get into newer stuff. Trading's about the search for truth, guys. Objective, personal truth. So rid yourself of subjective bias and find objective truth. The only way you're going to do this is by being honest with yourself or having somebody else review or watch you trade, because you might think you're something that you're actually not. We all do it, right? Oh, I didn't think that was mean. And then 10 people go, yeah, you sounded like an asshole when you said that. That was really mean. And you're like, well, it didn't feel mean to me when I said it. And that's just being honest. Like, you're not trying to lie to people. Like, I didn't think that was a rude comment. And then 20 people say, yeah, it was. So now you know. It was. So in trading, it's the same thing. The result shows you who and what you are. Just because you think you're different, the results will show you what you really are, what's really working, what's not working. The results will also show you who you are. Hey, I'm a 2R all or nothing trader, but I sell at 1.2R on every trade. Well, you're not a 2R all or nothing trader. You're a 1.2R trader. That's it. That's the objective truth. And if you don't track that, you won't know that. And if you don't videotape yourself, you won't know it either. So simple stuff. But many people just aren't doing it, all right? Or at least consistently doing it, all right? So now, let's take a look at a few things. This is what I wish I had today and yesterday and the day before. All right? Can't wait to trade with Yaroslav. Take away the last 3 days of trading. Anyway, this is what trading looks like when everything goes smoothly. You get a gap down, wide bar, narrow bar, 4-bar play, entries 172.88 or 173. I think I got filled late. I used a little bit of a wider stop loss, but it was up here. This arrow's in the wrong spot. It's not the point. This is what trading looks like when it works the way you want it to work, the way you expect it to work, the way you hope it'll work, and then the way it does work sometimes. Okay? Right? Everybody wants to come in and take a trade like this and walk away with $7,000 and go, sweet, I'll see you tomorrow. Right? This is what we hope for every single day, every day. But it's not how it always works, right? It's great when we do this, and you know what I'm talking about when you get a stretch where you won 5, 7, 10, 12 trades in a row and you think your shit doesn't stink because you just happen to get a boatload of these great trades. It's great, but reversion to the mean is real. But this also happens. You guys remember this from a couple weeks ago? Now, I did end up making $3,600 on this. But this was a trade. We're not going to critique the actual entry at this point. By the way, for those of you curious, so you don't ask me later, Jerry or somebody else, this was based off of a pre-market breakout at 424. Pre-market breakout at 424. Okay? Anyway, this thing triggers and ripped. Like, just ripped. Okay? My target was 427.95. It went to 427.89. That's it. Go take a look at it. You can see my P&L up here in the top corner. I don't know if you guys can see that or not. It's kind of small. I apologize. But I closed $2,500 and I had 3,660 open. It's actually a little more than that. You can see 38.39. That's at 427.18. Just went to 427.89. This thing went another 70 cents higher. Basically, guys, I missed my target by $75. A $7,500 target was missed by $75. Okay? Think about what I just said. All right? 1,250 shares times 6 cents. Let's do the math together. 1,250 shares times 0.06 is $75. So at one point in time, I was up $7,425 on this thing with a $7,500 target. Basically 99% of target. Okay? And what happened? Came all the way back. All the way back. Swiftly, too. About 10 minutes. Just boom, 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 boom. Right? All the way back. And I cheated a little because I only should have made $2,500. I should have only made 25. I made 36. My point I'm making is 6 pennies cost me $4,000. 6 cents cost me $4,000. Okay? Hold on. This. Another trade, right? You get in right here. Nice entry. Pops. You hit first target. The second half comes all the way back down and stops you out. And then, after stopping you out, NVIDIA went literally, not exaggeratively. That's a good word, Jared. That's a new one. Can we put that in the dictionary? Exaggeratively. Write that one down. Anyway, okay? NVIDIA then went $20 higher. I think it even clipped 900, right? So from 875 to over 900. And you just sit there and you're like, are you kidding me? That this stock, one for the all or nothing traders, tagged you by like 15, 20 cents and then just ripped. And you just sit there and you're like, really? Right? Really? What about this? Do you guys remember this one? Entry was 111. Stop loss was here. Okay. Tagged on the first trade. Right there. Just right there. Stopped out. This is why we use wider stops, Yaroslav, right? Then we get back in on the 84% play. Okay. And it went higher to target. But 1 penny. Right? The bottom of bar number 2 was 110.34. That's the bottom of bar number 2. I gave this 14 cents of extra room, but it went 15 cents and stopped me out. Yes, I got back in, and I made 1R versus losing 1R. But if it held by 1 penny, I would have made 2R instead of 1R, costing $1,500. 1 penny, guys. 1 penny costs $1,500. 3 pennies cost $3,000. Okay? Filled at 220.03 with a target of 216.03. DG went to 216.06. Then trailed out at break even, missed a $4 target by 3 cents. Now, before the geniuses come out and start telling me how trading works, you're like, well, why don't you just take it a nickel early? Well, one, NVIDIA, Microsoft, Meta, DG, these happen to be spready stocks. And taking it 5 cents early isn't as easy as you think it is for a couple reasons. One, I'm not staring at it, right? You're scanning for other trades, you're looking at other things, and you're not staring at it. So it may flash down to 216.06 very quickly. and pop back to 216.30. And then what? You're going to take it 30 cents early now? 40 cents? Where do you draw the line? Where do you draw the line? 1%, 2%, 10%? And then how quickly does it happen? This stock went down and basically bounced immediately. Didn't even really give you much time. And then all of a sudden, what are you going to take an 80% of your target now? You don't know that it's not going to pivot and come all the way back down and end the day at 210. You don't know that. So while you geniuses out there thinking, oh, I just would have taken it at 216.10 or 216.15. No, you wouldn't have. Because if you're that type of person, you probably would have taken it at 219 for $3 less. The point, though, is that between the previous trade and this trade, 4 pennies cost $4,500. 4 cents. Okay? Hold on, we're not done. We're still getting there. 1 penny costs $1,500. Yep, gave the trade 3 cents extra room. It triggered me in by 4 cents. Okay? Then stopped out by 1 penny before dropping the target. You can see the loss up there, minus 1,500. That was the risk at the time, right? Okay? Got back in on the 84% play. Okay? Got back in, but that was a very expensive penny. So now what are we up to? 5 cents? 1 cent, 3 cents, 1 cent. $6,000. Right? $6,000 over 5 pennies. Okay, hold on. And then sometimes you just can't win, right? This one is a doozy. Due to the recent experience from the previous week of getting tagged by 1 to 3 cents on several trades, I chose to use a much wider stop on SIGA. The proper 3-bar play stop loss was 1173 right here, right? 1173. Okay? Or 23 cents. I decided to use $12 or 50 cents. All right? At first glance, this appears to be smart, as the stock drops 29 cents or 1.26R down to 1121, then goes back up to 1176, which would have been break even. Right? It would have literally hit 1R and then got out at break even. Okay? And if it was all or nothing, you would have stopped by 3 cents. Right? If it were all or nothing, you would have stopped by 3 cents. And then it would have hit your 2R target. Now, hear me, follow me for a second. If you used a 23-cent stop loss, it would have hit first target, stopped out your back, and then literally hit full target because you needed 46 cents for this and it went like 48 cents. Okay? Then the stock comes back down to 1103, all right, which thankfully for me was break even due to an advantageous fill at 1153 on entry. This allowed me to move my stop. The point is this: management is everything. Both stop losses, small or large, trailed out at break even. But if you used all or nothing on the first trade with the 84% play, you would have made 1R. If you used all or nothing on the second trade, you would have lost 1R. But by the end of the day, you would have gotten your 1R back on the 84% play as it closed at 1092. Right? Now, you sit here and you look at this and you're like, sometimes you're just can't win for losing. No matter what you do, your management is just befuddled by the market. And sometimes all managements are, whether you did all or nothing or whether you moved your stop or a hybrid approach or pivots. Sometimes it just doesn't matter. Sometimes one management works extremely well and another management doesn't. See where I'm going with this? You can't be right all the time is where I'm getting. If you didn't notice the point I was making, you can't be right all the time. Your management will not be, quote, the right management every time. One day you'll see all the all or nothing traders making tons of money and you're like, gosh, I trailed out at break even or something. And then the next day you'll be the one making all the money because you got at least 1R and the all or nothing traders got a full stop out. Okay? And just in case you're curious, no, it doesn't just happen to me. Sorry I left your name in there, Adam and Brandon, but nobody knows who you guys are. But now they can Google you. Just messing. Okay, so I also needed a nickel on Apple for 2R, plus the penny on Amazon for 2R. Dang, 6 pennies for R. I got in NEM at 40.61 by 40.36, and it missed my target by 2 cents. Yesterday, Tesla missed my target by 4 cents, like WTF. 2 cents, 4 cents. And I think we all know that Tesla, you don't have a 20-cent stop loss. This is going to be a $1, $2 stop loss. So missing target by 4 cents is not much. That's not much at all. So 6 cents cost this person 4R. 6 cents cost Brandon 4R. Two different people, two totally different stocks. Apple and Amazon, NEM and Tesla. And I just showed you 4 examples. So, there's only one conclusion that we can come to. It's the only conclusion that we can come to. There are no other factors or variables in here. There's no other conclusion. And this is the conclusion that we can only make from this. It's the only conclusion you can come to. Trading sucks and the market has it out for me. That's it. That's it. Trading sucks and the market has it out for me. It's the only reasonable conclusion that we can come to. I mean, it just happened to me. 6 pennies cost $6,000. Brandon had 6 pennies cost 4R, and Adam had 6 pennies cost 4R also. So this is clearly and obviously, tongue-in-cheek, the only conclusion that we can make about trading. The algos are fishing for my shares. The market has it out for me. Trading just sucks. That's it. So why do you wake up and do it every day then? Right? Yaroslav and everyone else that gets frustrated, it's okay to have a momentary lapse of reason and get frustrated for a minute. I wasn't happy when Microsoft stopped me out today. I'm over it. I'm over it. As they say, it is what it is. As they say, this too shall pass. This too shall pass. And this is where objectivity is waning in most people. They throw out, what's that saying? They throw out the baby with the bathwater, that kind of thing. You're just throwing out your objectivity because of 1 or 2 or 3 bad experiences. Yeah, sure, how things happen matters, but it shouldn't. We talk about it all the time. Okay? But here's the curveball. Here's the curveball. Because I couldn't make this statement without making the victims look like fools. Oh shit, what happened here? What? I thought the market had it out for me. Meta came 8 cents from stopping me out, and then it ripped to target. You can see my P&L. It's down $4,512. In fact, it went all the way down to like $485.10. It literally came a couple pennies. Like, no, it was actually 8 cents. All right? I was down like $4,700 on this thing. 47. Look, wide bar, narrow bar. It peekabooed right here. See it right there? Little topping tail. Peekabooed. Pulled back and ripped for the rest of the day. Ripped. And then Meta looks like this. Meta was $4,750 minus $4,750.82 turned into over $6,000 gain. It's nearly an $11,000 difference. This is at $489. This thing went to $493. So take those 1,700 shares and add $4 to it. Yeah. This thing got it done. Got it done. But it was 8 cents from stopping me out. But I stopped out by a penny on the trade before, but I thought the market makers hated me. Well, then what's your excuse for this one? One stops out by a nickel, one holds by a nickel. You're right. It's an anomaly, Jared. It's the only time it's ever happened in the history of trading. Except when it happened again. BA, you can see my order at 185.51. It went down to 185.55. Came 4 or 5 cents from stop me out. Minus $4,530 turned into plus 7,000. Right there. That's the bottoming tail where my cursor is, right there. And then move, pull back, moved, and just kept on going. Guys, be objective with your trading. Sure, will there be times when pennies cost you literally thousands, maybe tens of thousands of dollars? Yes, there will be. Will there be times when pennies save you thousands and thousands of dollars? Yes, there will be. And in the big picture, I don't know exactly what the statistics are, but in the big picture, I like to believe that they cancel each other out. That the luck I enjoy from holding, okay, is offset by the unluckiness when they don't hold. And the unluckiness is offset by the luckiness. And therefore, it just ends up being flat. It just ends up being, it is what it is. I'm not the market. I don't have any say in the direction of the market. I can only control my actions. I cannot control BA after I get in it. I can't control the market after I get in it. But I can tell you that sometimes I'm the pigeon and sometimes I'm the statue. Okay? And it feels like shit, literally, when you're the statue. Feels really good when you're the pigeon, though, doesn't it? Nobody's complaining about this. Everyone's forgetting about the nickel that BA held. The nickel. They're forgetting about it. But you know what they're not forgetting? They're remembering the penny that Apple tagged them by. The 3 cents that Meta tagged them by. Shit, they're holding that for weeks. They're telling all their friends, oh my gosh, dude, I took this freaking trade. It's like a $4 target, all right? It misses my target by like 3 cents, comes all the way back down, stops me out by a freaking penny. And then, sure as shit, the thing goes and hits target at the end. Are you kidding me? Do I need to sage my house? Who did I piss off? Do I have to go to church, confession? What do I need to do? But yet, a day before that trade on Meta, their BA held the stop by a nickel, and they're not telling anybody about this trade. Nope, this one's long forgotten. You only remember the negative shit that happens to you. Why? It's all part of trading. It's all part of the same game. And sometimes you're on the right side of that game and everything just works. And sometimes you're on the wrong side of that game and things don't work. You just have to understand that it, generally speaking, weighs itself out. I've had 4 out of the last 5 days were down, but I had 12 consecutive up days before that. It's reversion to the mean. Do the math. Do the math. That's 17 trading days, not quite a full month. And if you do the math, that's about an average month. An average month is usually 20 trading days with 4 or 5 down days, one a week. That's kind of normal, right? You have 15 to 16 up days to 4 to 5 down days. Well, 17 and 4 is right on pace to be 20 and 4, 20 and 5, isn't it? It's reversion to the mean. But guess what? The down days happened in a cluster, 4 out of 5. They happened in a cluster. So when they happened in a cluster, you're like, oh my gosh, the market hates me. What's going on? This and that and all this other stuff. But when I was up 12 days in a row, stocks were holding like BA by a nickel. I wasn't saying anything. You know, when Meta was holding up here, you know, by 8 cents, I wasn't saying anything. This was part of my 12-day up streak. Just, I'm where I'm supposed to be. It's the way it goes. It's the way it goes. Also, to Yaroslav, because I can't tell you guys this enough, and to everyone else, guys, give your trades room. See this buy setup on Amazon? Okay. Nice buy setup, too. It pulled back a little more than we'd like. A little bit more, but bottoming tail, kind of doji bar, right? Just around support. Again, pulled back a little more. The entry's right here. The stop loss is technically under the bottoming tail, technically, right? This thing pops up, triggers you in, and then nearly stops you out. While this did work, it got very close to stopping out. Give them room. Give them some wiggle jiggle room. You put this a penny under here and it takes you by a nickel and you're pissed. Give it a little more room. If it takes it and comes back, add to it. Right? Add to it. So that's another point I wanted to make today. And I want to end on a positive note today. Last week's lecture was super long. This one's a little shorter. Hi, my name is Slim Shady, right? I am a student of Live Traders. Jared Wesley is a mentor and an inspiration. Should have saved this one for next week. After years of failing at finding my strategy and gaining my edge, it's safe to say I finally understand the unconscious competence Jared speaks of. This is my P&L from the past month of March and some of April. I put it all together in February and have been on my longest streak to date. Shout out, Jared. You are an amazing person. I'm going to miss those emails. But I didn't just put this up for you. That is this person's P&L. 5, 10, 15, 20, 25, 29, 30, 31, 32, 33, 34. 2 down days and 34 trading days. This person has 2 down days and 34 trading days. He should stop trading on Wednesday. No, actually, Wednesdays net are actually good. Net, right? But anyway, $20,358.10 in 7 weeks. Well done. I'm just giving this person props. I publicly tell you their name, but I didn't ask them for permission, so I just deleted their name. $20,358 in 7 weeks. And note, there's a little bit of everything here. There's $178 winner, $77 winner. There's an $1,800 winner. There's a $1,300 loser. There's almost a $2,000 winner. You can see that in the last couple weeks, they've done a lot better. So might this person have reversion to the mean? Maybe. But when you're up 32 out of 34 days, that's pretty damn good. $20,000 feels pretty damn good, doesn't it? You know, the red days were a little bit ugly, and yeah, the red days were eating up like 3 or 4 of the green days early on, not lately, but early on, yeah. I mean, seriously, it took, half their gains away, I think, here, and then again, half their gains, and then since then, it's just been nothing but money, Yeah, a lot of cushion, even if you pull back to $12,000 or $15,000, which would possibly really have a lot, So that's awesome. And I got this email a couple days ago. When was this? April 10th. Yeah, a week ago. So 2 people in the last week or so getting it done, kicking ass and taking names. Why do I do this? And I said it earlier. It's not to stroke me. It's to show you guys it's possible, that there are other people out there doing it, because I know how it feels when you're new. When you're new, you tend to think that no one else is making money. There's 2 thought processes. Everyone else is making money except for you. And the other one is no one's making money, so this business sucks. Those are the 2 thought processes. Man, I'm the only one not making money. Everyone around me seems to be doing well. What's wrong with me? And then the flip side of that is, man, this business sucks. Nobody makes money. I'm showing you guys this so you can see that, yes, there are people out there that are studying their asses off, working hard, and making money. Hedge fund. We have a person who works at a hedge fund now. We have a person from mentorship 6 years ago, something like that. They own their own hedge fund now. This person, $20,358. Awesome. Guys, I didn't solicit this. In fact, this person actually sent this email to info@LiveTraders. Didn't even send it to me directly. They sent it to info@LiveTraders. The first one was sent to me directly. Awesome. It's great to hear. And then we'll end it on this. What does bad trading look like? What does good trading look like? And you need to ask yourself, which one are you? Are you randomly changing your trade management because of 1 day, 1 week, or 1 month? Do you not have a pre-trade checklist? Are you risking too much too soon? I got another email. I was going to put it in. Maybe I'll save it for next week. But basically, I'll give you the gist of the email. This person took $50,000 and turned it into $170,000 during COVID. I think it was 2021. And then they took their 170,000, went back to break even. So 50 to 170, 170 back to 50, and then 50 down to 25. And now they're asking me for advice. What should I do? And the reason I'm bringing that person up is because why did it take so long to reach out for advice? Think about what I'm saying really and truly. This person clearly got lucky when they went from 50 to 170. Reversion to the mean took them back to break even. And then they lost another 25 grand. And I think they added more money and lost a little more too. Just think about it for a second. Why? Why does it take people so long to reach out for help? Ego? Oh, I agree with you. It's when the pain gets so bad, but if going from 50 to 170, 170 to 50 isn't enough of a roller coaster ride to say, hey, whoa, I need help. So this person clearly was risking too much too soon, not taking stop losses. They're basically just not trading well, So if you're continuing doing the same wrong things over and over again, that's poor trading. That's bad trading. Good trading is a specific and detailed plan, pre-trade checklist that you follow, proper money management, consistent trade management, take stop losses without question, and you correct your mistakes using statistics and consequences. It's so simple, but so few do it. So yet, despite all of this, sometimes the market is just better than you are. And this is where objectivity comes into play. Sometimes the market just gets you. Oh, well. You can cook the same dish 100 times, and every once in a while you burn it. I cooked edamame yesterday, and I overcooked them. It's the easiest thing in the world to cook. I went upstairs to my computer to finish something, and I was like, oh, shit. 15 minutes passed by like 15 seconds. I went down, and I was sure as shit. And that's something that's the easiest thing in the world to cook. You can't mess that up. But you can if you're not paying attention. And trading's the same way. You can mess up something so simple like share size or the volume of a stock if you're not paying attention. We all do it. The difference is professionals rarely ever do it. Novices do it frequently. That's the difference. None of us are perfect. So ask yourself, do I look like a bad trader? Do I look like a good trader? Do I apply and impart these things in my trading, or do I kind of just do whatever I feel like doing? Do I look to the left and don't give a shit? Because I see comments in the room all the time. Oh, I'm going to take this trade. And it's like, well, there's double pivot top to the left. Yeah, well, whatever. Right? So, I hope that you guys today learned a little bit about what trading really is, and that is a roller coaster. It really is a roller coaster. Even when you're a successful trader, you will have times where you are better than you should be and worse than you should be. And you usually, in both scenarios, revert back to what you normally are. Trading is not, hey, I bat 50% and go winner, loser, winner, loser, winner, loser, winner, loser. It doesn't work like that. It's a roller coaster ride. You might have 9 winners in a row, and then all of a sudden you'll lose 6 in a row. You may have winner, loser, winner, loser. So the key here, though, is to stay grounded and stay objective with your trading. Because if you don't, the market is going to eat you up. If you keep changing your trading plan every bad week, every bad month, the market's going to eat you up. If you get pissed over a 1 penny stop out, market's going to eat you up. Remember when they hold by a few pennies, because that happens too. Stay consistent. Stay objective, stay truthful with yourself or to yourself, and I think things will go well for you in trading. I wanted today's lecture to be a lesson in staying grounded, in looking at the bigger picture. You're going to lose some battles. As long as you win the yearly war, you're going to lose some battles along the way. It happens. Stay grounded. I'm not saying don't review your trades if you're having a tough stretch. Sure, absolutely review them. Do everything you can to sort out what's going on. But know that no matter what you do, you will still have losses from time to time. So, I hope you guys learned a little bit. I'm Jared Wesley of Live Traders. We'll get back at it again next week.